Yo, 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 yo. It's popping. Blessings, blessings, blessings. Coming in, record myself doing some more homework. I've actually been doing this for a minute now. But I got to an interesting setup that I analyzed and wanted to walk myself through it. So I'll just restart. I came to sand, right? And the first thing I was trying to look for is my T money. Right, my T sauce. The T sauce I usually like to find it for the T sauce, it usually has to cross some EMA. Now, for me, I usually like the 50 EMA. And on this particular time frame, all of the price range that happened around the 50 EMA is really too small on this time frame to be strong enough to what I consider for T sauce. So you have to flip it, right? If it's not going to give you the reverse side, what can you use to identify to help you give you essentially what you need, right? So the first thing I like to look for is, right, the cross of the EMA. So I look for the first initial break. This to me is the first initial break. Why is this the first initial break? Because we had the break of the 50 EMA here, followed with the continuation down, but we also have this gray EMA here. This is our 200 EMA. And this 200 EMA is serving a purpose for reasons like this, okay? And this is not so much as what I want to pay attention to. That, no, we don't really care about these giant wicks. What we more care about is closures that actually solidify and make some solidified price movement, right? That comes back and gives price balance to cup around to then what? Give a launch pad. So in order to find and set yourself up to do that, right? You got to find and set yourself up to do that. So step one, this is what paid attention to me the most. This counter right here. This counter specifically because this one is the one that really closed below the 200 EMA on a slightly different time frame lower, but it's right here at it. Okay, so this is the closest, solidified low that we've had. It's also, if we were to look at the chart like this, if I would box off where I want your eyes to look, looking with inside this box, right? If we're looking with inside the magic black box, the lowest what is the lowest closing candle within my black box? The lowest closing candle would be this candle right here, okay? And with this candle right here being the lowest closing candle, that would be our floor. Let's just call it floors and ceilings. All right, so I'm gonna mark from the start of that candle to the halfway point. And I'm just gonna consider that my floor, and I'm gonna draw a Fibonacci from the closure of the lowest closing candle wick up to the highest wick. Now, sometimes I do, actually, I'm gonna do it to the highest closing candle. Let's stay within those ranges. Now I'm gonna throw on the reversal Fibonacci. And let's unextend it. Let's make it a little bit thicker. Let's actually make it something else so we can see it. Okay. So now I'm gonna extend this magical black box to where our eyes are paying attention. Actually, we can just pay attention with everything that's on the chart now. So now, for those that may still be lost, when we come here, when we come into these low range of the 113 at 272, all price did, right? Just in case I lost somebody, was make a low here, made a low. After it made a low, it tried to continue this bullish rally, break out of this blue zone. The blue zone is our accumulation buy zone, what we really want. What we really want price to break out of, right? Or even coming to the aqua. This first candle here is exactly what we needed. But when you have a candle that engulfs like that, right when it crosses the aqua, what initially would be your buy entry, it's giving you a signal that it's reversing, obviously. So it reverses down. But this isn't where you know what I'm saying, sell or buy. You buy down here in this pivotal sweet spot zone between 113 and 272. This is where you buy. And you essentially would look to enter there Or you could look for confirmation there. What I mean by confirmation there is look for price to actually hold this low, then get in, let's just say, necessarily at the shift of momentum. Okay, price is holding this low, shifting the momentum here. Where's my arrow? Shifting the momentum here in the actual closure of the candle here. So that would be, you know what I'm saying, an ideal time to enter into the market. But you know what I'm saying, price obviously comes back. So how do you react to that? Let's say you stay in the trade. What do you do here? So for me, if I were to start to use this, I would put on my T-sauce. So for me, I like to look for impulses. I would identify this first impulse. I would identify this second impulse. And once I have two impulses, those are giving me two reactions. I would use these two reactions to confirm me a reversal on the third wave. So I would measure the low to high of this first wave, which created this fib box right here. I actually had it off. I don't know how I got that first one. Oh, I know why, because I did it to right here. I would identify this first impulse, which would give me this zone. Something's still off here. I don't know what's happened, so I'm just going to use this for right now for example purposes. Say you just did wick to wick because you didn't know any better. Okay. Price came down here and identified the zone. So you measure that first one. I'm actually doing this wrong. I'm going to set this up like that. This is going to be like that. So we're looking for price to come into this yellow box to confirm the takeoff, confirmation of this trade setup. And before I can confirm or validate the trade setup, it must confirm it. So to confirm it, price, what does it do? Price comes down into your blue zone, to your blue setup buy zone. But not only that, price goes deeper, as you can see, into this purple zone. So we ultimately will want price to hold this purple zone and go back up and into the yellow zone. So just in case I lost anybody, anything I just said and did, all we did was measure this first bullish impulse. Okay, that's how we got this arrow right here. And then we measured this second bullish impulse. That's how we got this second arrow. And I drew a measurement tool from this low to this high, which created the colored fib. In fact, if I were to take the fib, if I already hide the indicators and take the Fibonacci off now, it would more likely look into line with what we're trying to see. Okay. Actually make this a different color, so we can see if we can get some more visualization into play here. And boom, this is essentially what I like to box my chart up like. And what I mean by box is put my levels in here. All I gotta do is say here and here and here. And this yellow one, and the 50, and the 618, and then the 886. Boom. And then I drop the fib. Boom. This is how I mark up my chart. So now that I've had my first impulse and second impulse, what am I waiting on now? I'm waiting on price to come up, make some confirmation out of my color zone here. All right, come into my confirming my purple zone, confirming my blue zone, and then verified at my yellow zone. Price is verified, meaning I'm good to enter into the trade, or if I'm already into the trade, this is my last opportunity to enter the trade right here. Still not even a one. Even if you were to get in here and go for the first turn, it's a little bit over. It's over a little bit over 50. It's not a 1-to-1, but if you go to the actual target, it's a 1-to-1. But since you got in so late, let's say if you would have followed the rules and you got in where your stop loss would actually be in profit right now, your minimum target would be a 3. Look at the risk to reward difference. Okay. And I'm pretty sure price blows up because isn't this sand? This is sand. This is that same setup that blows up. So let's say, okay, that's not where it was. This is where you would have had your EMAs. Okay, you would have been able to see that not only did price not even closing your yellow box to verify your entry, so your entry was never verified, but price also did not close above this 200 EMA, acting as a floor. So instead of it being a confirming off of the aqua right here, picking up strength to go to the top side, it rejected this strength and acted as a ceiling and went to the bottom side. So that is how you would have used that. And does that mean the setup is valid and you give up? No. There's many different entries in your setup. You got to learn how to work those entries. So that was just one of the first ones. What did it do though? Came right back into that purple zone, came right back and accumulated right over our 50 EMA. Okay, as price is closing above our 200 EMA now. Look at what price is doing. We're getting, for the first time, 1, 2, 3 candle closures over our 200 EMA. What did price do when it tried to do it here? Reject it. What did it do here? Reject. What did it do here? Reject. The first time build up. So this is our second time attempting to enter into this trade. You got to know how to look. You don't just get in at the yellow when it's verified. You have to know when it's the appropriate time to get in and actually position yourself in time with the market. The levels will always be there, but in time, the entries will work themselves, right? You see prices coming back. Boom, look. Ooh, it would have shook people out again. You know what I'm saying? Some people would have been shooked out. When it came back, they would have exited out of the trade as, oh, it's selling again. Or they're probably buying and selling in this range, getting trapped instead of accumulating buys. What is the color? Quick question. What is the color of that? Out of any color on the screen right now, what do you see? What does that look like? So when all of a sudden this happens out of the past 4, 8, 12 a day, 4, 8, 12 half a day, or excuse me, 4, 8, 12 half a day, 4, 8, 12 a day, 4, 8, 12 half a day, 4, you know what I'm saying? Look at the days. When price has been accumulating, range. Oh, snap. Take off. How do you see that? You know, some people would say, okay, Trev, what you said kind of made sense, but I still don't understand how you saw that. Well, my friends, this is where I teach you how to draw boxes, right? If you don't know how to draw boxes, rewatch this video and rewatch what I just did, and hopefully it explains and makes it better. If not, continue to watch this video because we got more, baby. But intentionally, when you draw those boxes in certain places, at certain zones, at certain levels, it is able to help you identify these setups and identify these great, man, look at that. I ain't even got to say no more. It speaks for itself. And I actually have these steps lined up. So how you would identify with the steps, let's actually take off of the, actually let's just leave it like it is and put, there's something missing. That's what that is. I guess that's straight. How you would use this, I'll replay it with you. We'll run it back. And we'll let that thing play. So how you would do it is this would be your step 1. When the price cross under the EMA tier, that'd be your step 2. Actually, I'm skipping a step. Let me actually give you these and let you walk through. Okay. So what did we just do first? We identify the break of the impulse. What did price do now? It broke the EMA. The EMA I'm referring to is the color of the aqua, the 50 EMA. Now what we're waiting on is for price to reject one of the fib levels. Remember, for us right now, the fib levels are these color boxes. So instead of fib levels, think color box. We're waiting for price to break one of the color boxes. I'm going to change this into a different color. This is actually useful as a reversal zone that was used. So we're waiting for price to essentially give a blue candle out of one of these boxes. What does price do? Comes down into this aqua zone, aqua box, heavy, big candles all of a sudden. That is what we were waiting for. This is our, you know what I'm saying, the reaction off the fib levels that we wanted to get. This is 3B, price shifting the momentum back to bullish. How do I know it's shifting? Because of the structure. If you can't read the structure, look at the color look at the color of the EMAs. It went from red to yellow. That's how you know it shifted. If you can't visually read the structure of price on the chart, Okay, if you can't see that price broke these lows in here, swooped the lows, and then is accumulating back into price, the manipulation of the accumulation, then transferring over into the distribution. If none of that makes sense, this is where I teach you how to read colors. You know what I'm saying? That's all it says. Just showing you how to read the colors on the screen, baby. You'll see it. So where we are right now is the shift of price. Okay, we're at 3B. Next, we're waiting for price to cross the EMA. Price must cross the EMA. That's a valid cross. Now, I like the open and close both candles to be over it, like that next one. That's what we need. But then we need price to what? Test the reaction. This is technically price testing reaction, but I needed to come back deeper into the EMA like that. That is what I want to see and consider a test of the reaction. You know what I'm saying? So now, if and when it folds back over, I know that it's strong. Okay, I'm seeing. I see it gaining some strength. Is it going to fold back over? Because that might have been my second identified impulse. And if that was my second identified impulse, then this indeed would have been my 4B. Right? And not the second EMA shift, but the reaction would have been up. So that's not a 4C. With this would have been identified as my 5, giving me my second reaction. So what is the difference between step 1 and 5? Step 1 was the first reaction, and step 5 was the second reaction. Now, both these reactions are what we're using to become our reversal. So the whole point of me counting these numbers down, the whole point of me counting these steps is to line us up with the bigger one. So as I see price come back up here, giving a smaller reaction. This is actually, no, I was right. I don't know why I stopped. So this is the 4B. And this is your 4C. And this is actually the top of your 5. So these are both the same reaction on one because there is no higher high made. In fact, this was just the liquidity grab coming from the 88 cents to sweep this to confirm the higher high. But I'm not going to get into it. That's supply and demand for you. But that'll be our step 5. And when price comes right back down here to step 6. Now, step 6 is usually a valid and great trading opportunity. And for instance, right here, this step 6, this entry right here was a great sell. Pretty sure price goes down into the 786 and 86. It does. It breaks the 786, actually. Gives it right back up. You see, as soon as price closed under here, look at this is the lowest hourly 4-hour close lower than this major wick candle. See how price cupped and sucked right back into the zone as if it was nothing. Giving you what? What is that? Because I almost skipped some steps here, right? If this is 6, make sure everybody's on the same page. Okay, if this is 6, this is the cross of the EMA, and this is 6B, price reversing in the zone. This is 6C, price shifting. Look at the color of the EMA shifting. Price is breaking the structure, actually coming back into the structure, right? When price broke, where's my pen? Price broke the previous lows of here. Okay, price broke those lows and then what? Sucked right back into that structure, being 6C. So price is shifting back into that bullish momentum. And this is our first cross of the EMA. So this is our step 7. Price then comes back and retests the EMA in 1 to 2 candles. Very slight, very quick. Not the strongest of retests, but that still counts. That is a valid retest. So now let's see when price comes back up into this yellow zone again. Is it going to be strong enough? Let's see. Is price strong enough? Nope. Unshifted. Boom. Right there. So when I said nope and unshifted, this is a time when in 7C, especially 7C, 7-8, you hold. You hold to stop loss. Once step 8, and this is 8. Once step 8 is activated, you hold to stop loss. Because you'll get things like this where price will take off on you. You know what I'm saying? Not did it hit your target in one zone. I mean, not only did it hit your target zones in one candle, but it blew straight past it. I have to squeeze the screen just to get where we are. And does this not mean the trade setup is done? You see how it's price is getting exhausted and it's coming back and reloading, guess where you think it's coming back to continue, rinse and repeat. So this is my first trade setup that is analyzed for my homework. Actually, I just realized I went to a lower time frame. And you can also use lower time frames to accumulate and help what we're doing as well. I haven't really gotten into that, but that is a thing. Definitely a thing. So I just kind of want to save this real quick. I actually want to start doing a date price and range so I can calculate how long it takes for price to move to certain price points, because they do matter. They do matter for sure. Everything matters. Wish I could change exactly what it said too, but that's okay. Is there just a date one? There is a date one. Because it's date and price range for some reason. I don't know why it seems like so much. It's really not though. At this point, I might as well just do this the same. It's just the volume thing that's on there that's throwing me off. Let's keep moving. So I am not here all day. Ja? Duh. So that's sand on the 4 hour. Let's keep moving. Oh no, don't delete it for no reason. Let's see what else we can work with. Actually, give me 1 second. Yeah, yo. All right, I'm back. So let's see what we got next. So we just covered sand on the 4 hour time frame, I believe. Right? To define this setup. Right here. Right here. And gonna just continue going down the list, till I see what I see. Now I'm specifically looking for, T-sauce crosses. Something that's like this, something that's given 3 waves. And simply because that's just what's easier to, place yourself in with inside the market. Now this was a interesting one on the hourly time frame. This is definitely a setup, just structured very weird. This little mini hoop this is a very this is more structure right here. It's actually going to play like that off the 4 hour. That right there, this is all interconnecting into something. Let's see how I'll mark that up. So this would be your first impulse. And these groupings from this low, because this is your low here. So I guess I should also start doing this, identifying the lows and the price points. Man, this big giant, whatchamacallit? So 2308, that's the low. Then it comes and makes a new low here, 2166. So that's the beginning of our second reaction. And then there's smaller beginning of the reversal here off this low. So that's how you know by the lows that it's making. Remember, so you would draw your fib from the beginning of the first reaction. Not using that low though, I'm using this one. To the high of the closing candle. High of the closing candle. And if you get one that breaks like this, just draw your lows. That's all you gotta do. And then essentially like take things off like the 786. You would take off the 382 in my opinion. You know what? I would leave them on actually. Let's leave them on. But essentially what it did was it broke, you know, your low of 2308. So when it broke 2308, it had to make a new low, obviously. But you have levels here in between that 2308, which is exactly what it confirmed off of at 2238, your level. So all I did was draw up or highlight the 113 and 217, 272, pretty much between 10 to 30% from this reaction. So for people that I'm losing, I know I gotta stay in a certain time to keep people attention, right? This first reaction right here, right? This blue candle, I mean, this blue arrow got measured, right? I measured that blue arrow, and then at the low of the arrow, just beneath that low, specifically just below 10 to 30% is where this box is. Okay. So just below that 10 to 30% is where the beginning of this first or second, actually, first right here, second now here, acting out of that aqua, coming down, retesting here, going into our final trade. So it'll be something like here. And actually, I'm pretty sure those are supposed to go on the shifts. And the shift is here. We have another shift here, fake out there. Make that white for our fake out. And our first shift here with the bearish cross shifts here, here, and here, and there. Okay. So 1, 2, 3, 4, 5, 1, 2, 3, 4. You always want to have more blue arrows than you do black. If you always have more blue, then you're good. And your targets are pretty much those black arrows because those black shifts are where price is going to every time. Every time it shifts, it's connecting into those arrows. That's how price flows. Okay. So I'm actually going to delete some of these arrows to take your eyes away. Keep them on certain ones. So we can see price is accumulating right now, coming right out of that 382, pretty much making this setup accumulate. In my opinion, this isn't even a bad place to take. You know what I'm saying? This hourly candle will be confirming that. I might think about entering this right now. You see how it lines up on the 15-minute? Hold up. Let's continue on to the next setup. XLM I did before. So I started OKB. What is my screen doing? Oh, the price is just ranging on this pair. This thing actually ranges a lot. Good grief. The percent gain on this thing? I am on the 4-hour. This is intraday trades. 5 days is a weekly trade. Well, this is a weekly time frame when I'm not. 46%. From the aqua. 22%. That's my ballpark. 22%. I'll take that. All I want is 10. Give me 10%, man. I'll take that. Where's 10%? That's all 10% is right here. That's not even to the high. That's what you want. You want retracements back up that are up to the high. No more than 10% because it took what, 3 days to get back after what it took 12 hours to get down. About 3 times as long to get back. Sounds about right. Within the Trinity range. So how you would play this is almost similar to how we just did that last setup. First, you would identify my odds my first time doing this setup, so I'm kind of guessing my way through this. Not really guessing, but finding context clues. How I find context clues is by looking for certain things. This candle right here is the first one that actually continued with the break. This candle right here broke it, but it got rejected. This candle came a little bit lower, then got rejected. This candle here held price here for longer, didn't go lower, held it for longer, got rejected. So it's telling me something about this level that I'm gonna consider as just one whole one with that. And then this is your second one, really there. And then your third one's coming. If it hasn't came yet, I was gonna say, that's that, Jesus. Yeah, that's what that came into. Look how long and how, wow. Yeah, this ain't nothing to play with. It's really this right here, but it went over into that, as you see. So how I would identify and how I would even mark that up. Let's restart. And let's replay. Because I don't like cheating. I feel like when I can see the chart, the whole chart in the future, I feel like I'm cheating. I want to be like right there with it. You know what I'm saying? Put me there. Okay. So what we have, first reaction. So what I'm going to do, I'm going to measure that with my fib. Okay. So if you see that it did not break this low, that low is the, I don't know why it's not showing it. Pretty sure that's the 1618. And this low in the 1618 is there designated specifically because that is how that level is structured. So how I would level this, if this is my identified level of my 1, and this is my break of my 2, this would be my 3, and price is shifting here, being my 3B. First cross, test of that cross, second cross. Now this is looking like it's about to form the top of our second reaction, maybe. Let's see. Oh, I forgot. Yeah, now this setup, it breaks the high. I forgot that fast already. Wow, look, it actually completed this sequence, in my opinion. Like, look at that. It gained from the high over 50, 40%. Bro, what is this? Hold on. Look at that. That is ridiculous. 46% from the, bro. If you don't see this, I see how this right here, this small move, if nobody noticed that, coming from this, what is this? OKB, I gotta look this up. I don't know why I'm just getting excited from this. Seeing the range of this is powerful. I don't even know what this is. I need to do my research. I can see on the charts what this is talking about. Look how fast it dropped. Okay. So this would be your 6B. Your reactions down here. That would be your first break. This would be your test. Not a full under closure 3 candle test, but this is a slight test. So we're aware that was a slight test. That's why it kind of faded away as slow as it did. It needed to give a real test, which is what this is. Giving you that real test. That still counts as an 8 though. This is still your 8. As long as everybody's aware, we all are aware. So when we have our 8, these candles are anticipated. In fact, we're waiting on them. In fact, we want them to shove price right back where it's supposed to be. And notice how it did it right in this purple zone, right in that 786, 886. Right on time, right where it's supposed to. Not a coincidence. Price was right on time. At 23,800. So we rolling with. At 23,800, price did what it had to do. And let's see if it held. Did it hold? Because I don't remember. Looks like it's holding. It's holding. It's out of there. It's out of there. You know what I'm saying? So price is giving you these levels to look for. You just have to know what to look for and when to look for them. Because remember, I said it earlier, price is giving you these levels. Price levels are printed. It's just about the timing of the shift of momentum. Knowing the shifts are simple. Knowing the zones are activated and not even being looked at. Know what it means to be verified and to be forming and to be loading and to be anticipating. Hopefully that clicked. I think it did. So what I'm now is drawing my final colors so I can take off my fib, because when I do my markups, I like to do two, one with the fib and one without the indicators. That way those for the visual eyes of might be newer can see it, or just perspective. You dig? So this is actually a great forming setup. I liked how fast it accumulated, how strong the setup was. Really, you know, these next level wave of crypto type setups. Next level. But I feel like it's gonna be a lot of these. A lot of these big boys. In fact, this thing keeps going, but I'm not even gonna show. Actually, I'll let it play out a little bit. Give something on the chart. That's my first screenshot. Say that. Boom. And then I hide that. Take off the fib. On to the next, on to the next one. Let's see. I'm starting to get used to these. And by used to, ignoring them. Figured out when I ignore them, I am so much better at my trading. I'm not even getting into the extensions of like hitting y'all with like counting your levels like these and being able to. Oh, look how sweet that's playing off that. Man, I'm not even getting to this. Into these, and when you really just all you really just pay into is the shifts, because the shifts are the confirmations. She. Actual play, something like that. What does this look like? Interesting. Link chain, link chain, link chain, link chain. I actually wanted to try something where I go into one of the top 6 and I go just during the week on a different. Oh, do I got XRP marked up? I do. You just set up on XRP. Wow. You were always trying to sell it. It was actually a great buy. And that was last week. Oh, it was 2 weeks ago. The forming of the first 2 weeks of the month. This explosive move here. Maybe a little bit harder to see on the 1 hour. The 4 hour wouldn't have gained enough attention on a normal person's eye. So yeah, it would have to be the 1 hour. That just doesn't look like the normal thing that you would see, because these breakouts don't really set off as an alarm. You know what I'm saying? Like, they're just so slight, so minor. So you wouldn't just expect this. You know what I'm saying? So the confirmations are definitely there. Like, if I will run this down just real quick, that would be your 1. Okay, 2. Right, obviously that's your 5. So that means this would be your 6. So that means this would be your 7. 7B. 8 question mark. And that'd be your 8 right here. Yeesh. That's the 8. So you run that. Duplicate. Duplication. Duplicate. Can you duplicate? Can you reflublicate? Man. Let's see how much was that? How much percent is that? 20%, man. Can't beat it. Can't beat it. But I'm gonna go ahead and wrap this up so this video is not too long. Appreciate you. Thank you, love, and peace.